Hi everyone, welcome to another episode of Ask a Property Manager. This is episode number 51. I'm Andrew Schultz, principal broker of Own Buffalo Inc. We're coming to you live from Studio 2.0 here in Cheektowaga, New York. Today is December 16th, 2020. We got a really busy show for you here today. We're going to be talking about the AirBNB IPO. We're going to be talking about roots in pipes. We're going to be talking about our favorite items left behind by tenants. And we're going to answer some questions from housing providers around the country. Before we get into all that, let's go ahead and plug our social media. New episodes of Ask a Property Manager drop every Wednesday at 10 a.m. Eastern live on our Facebook page. You can watch those live at facebook.com/Buffalo Foreclosed Homes. You can also catch the replay the same day on Facebook as well as over on our YouTube page, youtube.com/OwnBuffalo. Don't forget you can always check out our Instagram as well. We post some content there that doesn't make it to Facebook and to YouTube. Usually more of our photo content versus our video content will find its way up over there. Last but not least, guys, don't forget that you can grab a free 30-minute consultation with me through the end of this year. I've only got a few more slots open. I've got one open for Friday this week, and then next week we have a few time slots open, and that's it. Once those time slots are gone, that's the end of the free 30-minute consult program. So that might be coming back around next year in a little bit different form. Certainly won't be a free consult program. So if you are looking to take advantage of that, now is the time. Jump on that while you still have the opportunity. Don't forget about the Rent Prep for Landlords podcast. New episodes of the podcast drop every Thursday morning over at rentprep.com/podcast or anywhere podcasts are heard. This week's episode, we're actually on a 2-week cycle. So this week's episode was actually the episode I plugged last week, but it does drop tomorrow morning. We're going to be taking a look at how to get a late paying tenant onto a payment plan, the importance of shower curtains. We'll actually be touching on that a little bit in this episode as well as renter's insurance, and how to give a gift to a tenant during the holidays. So don't miss out on that. New episodes of the podcast drop every Thursday morning, except for last Thursday. Sorry about that. And then for the remainder of this year, we'll have a new episode tomorrow. We're going to be skipping a week, and then we'll have another episode the week following. And that'll take us through the end of the year on the podcast. So definitely check that out. That's going to be a good episode of the podcast for sure. Let's see here. Where do we want to start? Let's start with our news stories of the day. Change my screen here. We'll go over to desktop. We're going to start with this article from CNBC. Coldwell Banker Real Estate CEO... Coldwell Banker Richard Ellis, CEO, says he expects at least 80% of office occupancy to return post-pandemic. I will say up front that I don't necessarily agree with his stance on this, but let's jump right in here. The CEO of real estate firm CBRE told CNBC on Friday that he expects the coronavirus pandemic to have created a lasting impact on offices, but he's hardly envisioning a doomsday outcome. You'll see a hybrid scenario, lots of people returning to the office. We think 80% plus of that occupancy, if not more, will come back, said Bob Sulentic, on Power Lunch. There will be remote working, flex space, there will be working from home, and there will be creative things happening in the use of office space, that's for certain. The future of the office and how much square footage will be needed has been in question for months after the COVID-19 outbreak in the spring caused companies to shift to remote work. Firms such as Wall Street banks have welcomed back a small percentage of employees, while others have opted not to keep the vast majority of their employees working digitally as the virus remains widespread in the United States. For some companies, such as software firm Okta and Jack Dorsey's Twitter and Square, the pandemic has caused them to offer employees a permanent work from anywhere arrangement if they so choose. In Sulentic's opinion, I hope I'm pronouncing his last name right, the rollout of a vaccine to prevent COVID-19 will be crucial in having more employees back in the building. We think by the second half of next year, you'll see much more activity in office buildings. By the time 2022 rolls around, he foresees additional recovery in the hotel and retail sectors. That I do agree with. So it's a mixed story, he said, as there are now pieces of the market with secular tailwinds and other pieces of the market with secular headwinds introduced by COVID. And basically what he's saying here is different parts of the commercial real estate market are being impacted in very, very different ways. Warehouse and data center represents an area of strength in the real estate market during the pandemic, with further adoption of e-commerce and the companies pivoting to the cloud. There's no comeback on warehouses. There's been record activity level on that throughout the COVID period for the most part, he said. Data centers are super strong, so you're not talking about the comeback in those asset classes as well. It's interesting that he mentions warehousing and data centers because the two really do kind of go hand in hand. A data center is really just a high-tech warehouse at the end of the day in a lot of instances. So I hadn't really thought about data centers as being a part of this entire scenario, but it's interesting that he brought that up along with warehousing. We've talked about warehousing as recently as last week's episode with the building of a new warehouse here in Grand Island, which is basically being built on spec, which means there's no tenant lined up for it yet. But there's such a demand for warehouse space right now that I don't think it'll be a problem for them to fill that space. Keeping on in the article here, CBRE's exposure to those segments of the real estate market are likely the reason the company's shares are positive for the year despite pandemic disruption. Our earnings stream has been far more resilient than people expected, and that's really what you're seeing in our stock. The Vanguard Real Estate Index Fund ETF is down about 9% in 2020, while shares of CBRE are up about 7.5% year to date. The stock closed slightly lower Friday at around $66 a share. On Wednesday, it hit its 52-week high of $67.70. So I just want to go back into this article here real quick. He mentions the recovery in the hotel and retail sectors, and he's talking about that by the time 2022 rolls around. I would say that that's probably accurate. I think that by 2022, we're going to have people traveling again for conferences, traveling again for work, and traveling again for pleasure. So I definitely think that you're going to see a pickup in the hotel and retail sectors by that point. Hopefully before then, really, but I think 2022 is kind of a realistic time frame for that at this point. The warehousing and data centers, again, we'd already talked about that a little bit. The data center thing is one of those things that I had never thought about, but it makes a lot of sense when you start thinking about real estate and how different companies are impacted. Warehousing and data center go kind of hand in hand there. So that's pretty interesting. I do not agree with his stance that offices are going to go back to the way that they were. I think that there's going to be a lot of companies that are going to be doing a more permanent work from home or a hybrid scenario, kind of like what was being discussed here with Jack Dorsey's Twitter and Square. I think that you're probably going to see more companies offering solutions like that rather than forcing people back into offices and scenarios that they might not be comfortable in. And honestly, I think that what people are finding as part of the work from home movement, yes, there are a lot of people who had initial struggles, but I think that people have started to become more comfortable with the idea of being able to get up and start their workday and end their workday and not have to worry about that middle part, that commute there, where they have to get to and from the office and everything else. I know here in our office manager is now essentially full-time remote and then in the field as necessary. And then I bounce back and forth here between the office and then a home office as well. And it just works out so much better. It gives us the flexibility to manage things a little bit differently than what we used to be managing them. So it's definitely had a positive impact for us in terms of the flexibility that it's offered. Let's move on to the AirBNB IPO. This is one that's actually pretty interesting. I'm going to start this off by saying I'm not a stock expert. Please don't take financial advice about stocks from me. But I do want to touch on this because I think that it does have a real relevance in the real estate world. And I think it'd be a shame not to. This article comes to us from Housing Wire. I want to mention that this article is a few days old. This is from December 10th, and today is the 16th. So this article was written essentially on IPO day. Airbnb more than doubles in market debut. Open trade valued Airbnb at $101.6 billion on Thursday. Airbnb shares have more than doubled in its public debut on Thursday, per the Wall Street Journal, after opening trading at $146 on the NASDAQ, higher than its IPO offering of $68 a share. The opening trade valued Airbnb at $101.6 billion versus its IPO valuation of roughly $47 billion. That makes Airbnb the biggest U.S. IPO in 2020. The company had been widely expected to go public this year, either through an IPO or a direct listing, before the pandemic made that less likely. Like many enterprises in the housing industry, short-term rental companies suffered a shock at the beginning of the pandemic. Airbnb hosts saw $1.5 billion in bookings canceled in mid-March, and while guests got full refunds, hosts still had to pay mortgages on the properties. But the demand from people locked down at home helped the company recover much of its bookings over the summer. While revenue was down 32% year over year in the first 9 months of the year, Airbnb posted a profit in the third quarter. At the beginning of October, the company had more than 7 million active listings of homes and experiences, such as guided activities, in more than 220 places globally. Founded in 2008, Airbnb officials said in May that it had raised $1 billion through a combination of debt and equity from investment firms Silver Lake and Sixth Street Partners. For the slew of mortgage companies looking to go public in the near term, the wild IPO of DoorDash on Wednesday, where shares closed up more than 85%, and today's very successful Airbnb IPO could be cause for optimism. We're going to skip over the rest of that article there. It goes into some other companies. But I do want to mention again that this was written on December 10th, and today is December 16th. So we're looking at an article that's a couple of days old here. Now let's jump over to Google and show you what that stock has actually done since it's opened up. You can see that we started the day, we started here in the high 140s, 147.72. We're currently at 134.51. And then as time goes on, you can see over the couple of days here, there was a big dip in the pricing here. We went from that 147 mark down to a low of, looks like 121.90. And I was like, well, what happened here? And again, I'm not a stock expert, but I'm sure curious when I see something that spikes that way and then drops right down. So I did a little bit more looking around, and I came across this article by The Motley Fool, Why the Airbnb Stock Crashed This Morning. And this was written on December 14th, which if you come back here, you can see essentially that is the day when everything kind of took a dip here, was December 14th. What happened? Airbnb had a great IPO last week. First, dramatically raising its IPO price to a range of $56 to $60 before actually going public, and then more than doubling on its first day of trading before pulling back just a bit to close the week. This week could be a bit different. With a downgrade as the first news of the week, Airbnb is starting off on a down note and falling 8.4% through 1:10 p.m. Eastern. And again, this is as of the 14th, so that part might not necessarily be relevant. Let's increase our size here a little bit. So what exactly happened this morning? Here it is in a nutshell. Airbnb's IPO was a huge event on Wall Street, necessitating the involvement of more than 36 separate investment banks to bring it public. One firm that did not participate in the IPO, however, was equity research firm Gordon Haskett. It took its independence and the fact that it's accordingly not bound by any post-IPO quiet period as an opportunity to throw some shade on the IPO. In a note covered earlier today by StreetInsider.com, they downgrade Airbnb all the way from buy based on its pre-IPO to underperform, i.e. sell, based on its post-IPO run-up. Airbnb's stock price, currently just under $128, looks more than stretched according to the analyst, and is about 3 times the valuation according to the rival online travel agencies such as Booking Holdings and Expedia. Although the analyst believes that Airbnb's rapid growth deserves a premium, it considers the current 300% plus premium excessive and calls today's downgrade a tactical valuation-driven downgrade, predicting the gap in valuation will close in the near future. So essentially what they're saying here, assuming I'm reading that right, and I'd like to think that I am, is that they actually expect that this stock is going to continue to tumble for a little bit here. Now what? So by the end of the year, they expect to see Airbnb trading at closer to 103 a share, as opposed to its current 128 valuation. When you consider that Airbnb recorded more than $1 billion in losses over the past year and negative free cash flow in excess of $1.2 billion, the analysts are forecasting the continuing cash burn through 2020 at least, and generally accepted accounting principles losses through 2022. I could not disagree. Airbnb's future may be brighter than its present, but in the near term at least, there are plenty of reasons to be skeptical of this stock's current $76 billion valuation. So it's interesting to see. I don't know if you guys are familiar with The Motley Fool. It's actually a pretty decent website to get some financial news from. I feel it's probably one of the less biased websites out there when you're trying to find information on financial news. And they do a pretty good job of explaining it in terms that make it easy for the common man to understand, if you will. Which is why I like their website. I'm a big fan of The Motley Fool. I would recommend it to anybody. It's fool.com if you're looking for the website address. So moving forward here, what do we think about the Airbnb stock? I don't think Airbnb is going anywhere in the near future. I think that stock is going to be around for a long time. I think the company is going to be around for a long time. And let's just take a quick look at the Facebook stock from when that IPO'd. Let's go back to the max. You can see here that it started at, looks like 38.23, and then right after it IPO'd, it took an immediate dip into the high 20s, low 30s. And actually, I believe at one point it had dipped down into the low 20s, maybe even the high teens. But obviously, we're talking back in 2012 here. So there's been a pretty substantial amount of things that have happened between 2012 and now. And obviously, you can see, hey, look at that. Facebook stock has done just fine after an initial dip on the IPO. I'm not saying that that's what's going to happen here. You'll have a dip and then you'll have a climb. But realistically speaking, I think that Airbnb is in a position right now, even like if we're talking about our previous article here, where we're talking about 2022 rolling around, additional recovery in the hotel and retail sectors, Airbnb is going to be directly impacted by that. Obviously, they discussed in the articles that there was a huge dip in volume with Airbnb as a result of travel restrictions and everything else. Obviously, that's still going to be in place in at least some capacity. I know that they have picked up with the number of people who have been booking through the site, but it's going to be a longer term impact. It's not going to be, just a short period of time. I think that they're probably going to be struggling with this through 2021, just the same way that they were talking about hotels and retail struggling through 2021. And then I think things will start picking up once people start traveling again, both for business and for pleasure. So that's kind of where I see it. I don't know why they chose to do the IPO now as opposed to waiting. I like that's just above my pay grade, above my skill set. But I almost wonder if they would have been better off waiting for a period of time in order to be in a better position with earnings and things like that. So I don't know, just my thoughts on it. Your thoughts may be different. Have you ever used Airbnb to rent a place, or have you ever hosted on Airbnb? Are you one of the hosts that was impacted during the COVID pandemic? If you have comments on Airbnb, let us know down in the comment section. It's interesting because it's new-ish, I guess I would say. But I think that it's really going to start to pick up traction, and I don't think that stock is going to stay low for a real long period of time. I really don't think that it's going to see the huge dip that they're talking about. So that's my thoughts on it. Just give us your thoughts. Let us know what you think about it down in the comments below. I'm interested to see how many people are thinking about converting long-term units into short-term units for rental as well, and how many are converting their short-terms back to long-terms, because I think that that's pretty telling as well. Let's take a look at some humorous stuff for a minute here. Change from our little bit more serious topic into something a little bit more humorous. This one was picked up, I think I initially saw this on one of the Facebook groups, and then I downloaded this off of, I believe, the Crappy Design subreddit. That is literally a vertical blind being used as a shower curtain, essentially. I'm hoping that this was put up temporarily as a joke, because I can see that there is a shower rod in there, hopefully to hold an actual shower curtain, but desperate times call for desperate measures, I guess. This is definitely something that I could see me trying to pull off in college or something like that, rather than going and getting a proper shower curtain. This one, I believe, was pulled from either the Rent Prep for Landlords Facebook group or one of our home inspector Facebook pages. This made me laugh so hard when I saw it, because the only thing that I could think of was the Clark Griswold house from Christmas Vacation. And I've seen some pretty sketchy Christmas wiring in my day, but I think that this one probably takes the cake. I think the best part of the whole scenario is if you look at the outlet, you can literally see where the cords are starting to pull out of the outlet, the plugs are pulling out of the outlet, and you could see the beginning of some char there. So looks like this one's going to end well. Let's jump right into our questions from housing providers around the country. We're going to start with roots in pipes. I have a water runoff pipe that's clogged with roots. The plumber worked on it for half a day with a circular blade snake machine, pulling tons of roots out before he gave up. Now the basement is flooding, so I need to solve this problem. A tenant who works as a hotel maintenance person said they have used chemical bombs that eat away at the roots. Have you ever heard of this or used one? I need to solve this fast. So that actually is pretty relevant to something that's been happening in our business lately. This was last week, maybe 2 weeks ago, at one of our properties where we had to pull a root mass out of a sewer line. This was caught in the sewer line between the house and the city sewer. And that's a combination of roots and baby wipes and cooking grease and probably some other stuff for good measure. But this actually caused a flood in one of our basements, unfortunately. So that's kind of what we were dealing with in the last couple of weeks. It's not all sunshine and rainbows here in property management land. But going back to your question, in terms of using some sort of a chemical, I think that you still have some mechanical options here that I would recommend before jumping into a chemical option. And the reason I say that is because every time we've used a chemical option, our plumber comes back and screams at us. And it doesn't matter if it's Drano or if it's one of the more substantial root-eating type chemicals that you would run down a drain or something like that. anytime chemical intervention is required, it does have the potential to cause damage to the pipes, the interior of your pipes. And if you have an older clay or an older cast iron main or something like that, that might have a thinner wall, if you go ahead and use a chemical that eats through that wall, you've now created an even bigger problem. So always start with your mechanical means of clearing a blockage in a line. That being said, it sounds like you've had some kind of a cutter through, whether it be a spade bit or like a round cutter or something like that. I guess it says here that it was a circular blade snake. They may not have used a spade on it. So that would be step one in any sort of a root clearing process. And then if they're not able to clear it using that, my next mech recommendation would be you're probably going to have to run a hydrojet machine down through there, which is essentially, it's exactly what it sounds like. It's a hydrojet. They run it down the same way as a snake, and it'll have an end on it that you run water through, and it pushes the water through at a high pressure, which then cuts through whatever is in the line, whether it be roots or whatever the case may be, so that you can kind of push that out, clear the line and get things squared up that way. That would be my next recommendation, would be a hydrojet. Then after you do your hydrojet, my recommendation would be get a camera, run down through there, and generally speaking, the guys who run the hydrojet are going to have a camera that they can run as well. They can actually run a camera down through that line and pinpoint exactly where the issue is and tell you if you have, a break in a line or a shift or kind of what it is that's causing the backups. So that way you'll know, okay, this is something that I need to monitor on a yearly basis. Maybe, we have a couple properties that we just go out once a year and snake them. And it's a preventative thing because we know that we have an issue on the line, but it's not so bad that it needs to be replaced. It just needs to be, maintenance, preventative maintenance on a yearly basis. So that might be an option. And then you may find that you get to a point where you have to replace it. But if you can get some additional time out of that before you have to make that big expenditure, it might be worth it. And then obviously knowing what it is that you're dealing with, you may be able to pinpoint the exact location of the break. And if that's the only problem you have on the line, you might be able to fix just that one section of the line as opposed to doing a stem to stern replacement of the entire thing. So you do have some options there before you jump into the use of any sort of a chemical option. And then if you are going to go with a chemical option, I would recommend talking to your plumber and see what they would recommend in terms of a chemical that might be less harmful to whatever the pipes are that you have in your particular property. They would be able to give you a better indication on that than I would from across the country. Items left by tenants. 2020, what a crappy year. Hopefully we can get this COVID thing under control, get people back to work, and rent paid on time. On a positive note, check out this sweet toaster oven that a tenant left upon move out. It was like brand new. I've had people leave working grills, a deep freezer, a couple of sweet Nerf guns for the kids, and numerous other things of value. What's the best thing that a tenant has ever left behind? So this one was fun because we've actually had a lot of stuff left behind over the years. The one thing I do want to mention is make sure that you're doing whatever you need to do by state law in terms of storing things after a tenant leaves. It's a requirement in some states that you have to store items for a certain period of time before you dispose of them. And then typically they may have some sort of an instruction as to how they have to be disposed of, or if there's no instruction set, I guess you can basically do whatever you want with it. All that being said, we have come across some really crazy stuff that tenants have left behind. Just off the top of my head, I would say my favorite item was probably a step ladder that I picked up. Actually, I was out of a foreclosure. That wasn't even out of a rental property. I picked up a step ladder out of a foreclosure that was basically brand new, and I still use it. I think I've had that thing for like 8 or 9 years, and I still use it. It actually is one of the most commonly used ladders in my personal residence just for getting up to do small jobs and stuff like that. That's probably my favorite thing that I've ever come across. We did have a tenant that left a washer, dryer, stove, refrigerator, and chest freezer, like basically an entire household suite of furniture or of appliances, because they were moving across the country and just didn't have the ability to take it. They didn't have the space on the truck or whatever. So they left essentially a brand new stove, refrigerator, washer, dryer, and a chest freezer. So that house got re-rented with a full set of appliances included. That was, definitely one of the larger things that tenants have left behind. And it kind of worked out well in that particular instance. Something else that we had found, this was actually in a foreclosure, I believe. I found a bunch of unopened baseball cards, believe it or not. Unfortunately, they were from kind of the early 90s when it was all, overproduced, mass-produced type stuff. There wasn't really anything of value there, but that was pretty cool to find old unopened baseball cards from, basically from my childhood, from the early 90s and stuff like that. That was pretty neat. So that's probably one of the coolest things that we've ever found that was left by tenants. We've definitely found our fair share of gross stuff, and we definitely get more trash than treasure, that's for sure. But every once in a while you get lucky and a tenant will leave you something good. Using tenants as property managers. We own a small apartment building, about 4 units of various sizes in a small town. The past few years we have gone south for the winter and been able to solve any problems with the help of a handyman. This year has been terrible. Tenants moved out and a new tenant is not paying rent. I'm heading up to evict the non-paying one. After all that, my question is, we have a great tenant who's interested in being a semi-building manager. Should we get a separate agreement or just write a new lease? Any thoughts or ideas? Yeah, my thought is to not do this, to be honest with you, for a multitude of reasons. Do not hire tenants to do work for you. It's a terrible idea. If you're looking for a property manager, hire a professional property manager. The cost of bad management is so much higher in mistakes and screw-ups and liability and things like that. The cost of bad management is so much higher than the cost of good management. But it's tough to prove it on paper until somebody really makes a big screw-up. And it does happen, and it happens frequently. And you might not even realize that they're making a mistake until it's too late to correct that mistake and you're already on the hook for something. Hiring a professional manager unlocks a lot of doors automatically. You're getting somebody that has a skill set, a training, a knowledge of law, just a variety of different skill sets that all kind of encompass the property management world. A tenant that is interested in being a semi-building manager is not going to come with that same skill set. You might think that that's fine because it's only a 4-unit building, but you can get in just as much trouble on a single-family residence as you can on a 4-unit building, a 20-unit building, a 120-unit building. There's a lot of ways that you can misstep, and if you don't know what you're doing, it can really turn around and bite you in a really, really bad way. In many states, New York being one of them, in order to manage property for someone else, you also have to be licensed in order to do so. In addition, you're also talking about, in this instance, basically creating some sort of an employment relationship with this tenant. So now you need to take into account things like your general liability insurance, your workers' compensation, your unemployment insurance, and things like that. Or you might be able to set them up as an independent contractor, but again, that comes with its own set of circumstances. Now they need to have some kind of an insurance or they're putting you at risk. There's a lot going on here that I think you would be better served by hiring an actual property manager than just trusting a tenant to do this the right way. There have been so many legal changes this year in the way that laws, are the way that even a simple eviction is processed now versus the way it was processed in 2019 is completely different. There's been so many changes legally and otherwise this year to this industry. Now more than ever, I'm recommending against people hiring untrained property managers because it will turn around and it will bite you. Just don't do it. Just don't do it. To give you a relevant story, actually, we literally just had a self-managing client reach out to us that had a scenario where they had trusted somebody, an unlicensed individual, to manage the property for them, and it went poorly. The person had put a new tenant in without having all the paperwork or anything signed. That tenant turned out to be a nightmare and wasn't paying rent or anything else. There was no lease in place. There was no security deposit in place. There was no first month's rent in place. They basically created a verbal tenancy, a verbal month-to-month tenancy by handing the tenant keys and giving them possession of the unit. So if you don't know what you're doing, don't self-manage. If you don't know what you're doing, don't hire someone that else doesn't know what they're doing to self-manage. Work with professionals and it'll make your life so much easier in the long run. If you're trying to find a property manager, my first recommendation would be head over to the NARPM website, NARPM, the National Association of Residential Property Managers. You can search for property managers in your area that have a NARPM membership. And essentially what that means is we agree to a set of standards as a NARPM member. We agree to a code of ethics as a NARPM member. And I find that people who are involved with NARPM also tend to be more up to date in property management practices, best practices in running businesses that are involving property management and things of that. That would be my recommendation. Head over to the NARPM website, take a look, find yourself a competent, trained, licensed property manager, and go from there. No smoking policy. I did a search within the group on the subject and got some good information, but I'm looking for some additional opinions on a non-smoking policy. Smoking within the unit is an easy call. Specifically, I'm looking for pros, cons, practicality, and fairness of stating no smoking beyond that. Outside anywhere versus outside within 20 feet versus within 100 feet, etc., etc. Note, this is a townhouse. I only own one unit in a building of 8. So essentially what you're trying to determine here is, sounds like you're pretty sure you're going to have a no smoking policy in your apartment. That makes sense. We have a no smoking policy as well. But when you start talking about dictating where tenants can smoke outside the property, that's where things might get a little bit more challenging, specifically because you don't actually own the property by the sounds of things, because it's in a townhouse type situation. So I'm envisioning that this is either some kind of a co-op or something along those lines. A little vague, I don't know. Anytime you're talking about regulating someone's behavior outside of the physical walls of your rental unit or common areas or something like that, things can become a little bit tricky, specifically when you're talking about the outside of a building. I will go ahead and pop up our smoking and candles addendum. Lease clause. This is actually the lease clause pulled directly from our lease that we use when we talk about smoking and candles. Smoking is not permitted anywhere inside the apartment building, including but not limited to the apartment itself, attics, basements, laundry rooms, common areas, hallways. Smoking is permitted outside. Cigarette butts should not be discarded on the ground. Extinguished cigarette butts may be deposited into trash cans or dumpsters only. Candle burning is not permitted in the apartments. Both smoking and candle burning result in soot buildup. An additional cleaning fee of $250 per room may be assessed if landlord determines tenant has been smoking or burning candles in the apartment. So jumping back to the question here, I would say that you can definitely do a no smoking policy for inside the unit and inside the interior common areas. In terms of setting guidelines for outside of that, you might have to do a little bit more research for what is allowable in your particular state, or even what's required in your state. Because if you're dealing with a multifamily situation, they may have no smoking laws in place regarding that. Kind of similar to the way that they have no smoking laws regarding commercial buildings and public offices and stuff like that. So that's kind of where I would go with the no smoking policy. I think that you're okay to do a no smoking policy inside the unit without any challenge whatsoever. I would be a little bit more cautious about what you specify in terms of outside. And I would definitely make sure, if you are specifying anything with regards to outside, that you specify people can't just sit and throw butts on the ground and make the property look like garbage or something like that. So definitely something to keep in mind. You're going to have to probably check in every once in a while and make sure that they're not abusing the property and that they are taking care of their butts. But otherwise, I think just specifying outdoors only is probably sufficient in this instance. That pretty much wraps things up for this week's episode of Ask a Property Manager. Thank you all so much for watching. I truly do appreciate it. We love producing Ask a Property Manager, and the best way that you can help us to improve is by dropping a question in the comments either on Facebook or YouTube, and your question may be picked up and answered in an upcoming episode. If you enjoyed this content, or if we brought some value to your day, please do us a favor and hit that thumbs up button. Facebook and YouTube both push videos based on community feedback, so every like, comment, subscribe, and share helps us to grow and reach more people. We'll be back next week with an all-new episode, December 23rd. That's next Wednesday at 10 a.m. Eastern. We're going to be back with an all-new show you won't want to miss. Thank you all so much for watching, and we'll see you next week.